Hello, everyone. Currently, one viewer in the chat. If you have any questions, I'm going to wait. Oh, okay, let's see if we can get some watchers in. Let's also share the link towards the Discord channels. Uh, ta-da. Okay, good afternoon, guys. A little chart and chill session. To be honest, I'm not really that interested in the market overall. Of course, we do have news in half an hour, but normally that is not a really big mover. And since we have like seen a lot of movements on dollar and on foreign currencies in general, I'm not really expecting anything. But hey, nonetheless, we still got very late night moves as well yesterday, so expect the unexpected, I would say. So you never know. However, not a lot of things that fit my model, to say the least. Um, Doctor Matrix, hey man, I hope that you're doing okay. USD cat is going up nicely. Is USD cat going up nicely? Um, yeah, but I do have to say that okay, we are reaching a key level, but we are trading inside of this consolidation range. So we have the buy side over here with relative equal highs, we have sell side over here with these relative equal lows. So this is very like cautious area for me. Price could easily sweep lower and then go higher, but also in general, dollar is very weak. So this is not something that I would look out for. Mostly a crypto trader, but looking into forex the last week. So happy to hear your opinion. Yeah, look, I'm not sure, of course, if you are any familiar and how far you are in your journey, of course, but it is very important to trade in line with the dollar index, and the dollar index DXY is very bearish. So I would not suggest this as an individual pair that you can long without the correct bias on dollar, at least when it's not aligned with each other. Good to hear that you're doing fine, man. Dr. Matrix, good to know. I'm glad. And you're also always smashing Nasdaq every time, every single day, every week. So I'm sure that you are doing okay. If you have any specific questions you want to know, in general, Hugo, it's you can ask away, man. It's more than fine. I'm open to help you with any sorts of questions that you have. I can also explain why I'm currently not that interested in like seeing immediate moves. Look, as you can see, mainly here on EURUSD, as an example, this is Monday's candle. Let's remove these drawings. But this is Monday's candles. This was yesterday. And this is the current daily candle. So this is the daily candle of today. And you can see that we are heavily overextended to one side, and we have traded into this premium array in the form of the daily order block. This is a bearish order block. This is the reference point. So it could be the case that we are going to see a little retracement, which would actually be good. Which would actually be good so that we can look for continuations. But it is indeed a very fair point what Dr. Matrix is telling in the chat as well. Since we are this overextended, and also with the fact that we are in an NFP week, during an NFP week and when you are trading major currencies, you should always frame your main trades at the beginning of the week. Normally trading becomes more easy later on in the week, but with NFP we have a certain protocol where you are mainly wanting to trade on Monday, Tuesday up until Wednesday. Thursday is a hard skip, and Friday is a skip until the news release itself. Maybe you can participate after the news release if it is suitable for your model, etc. But watching prior is too much of a high risk environment, which is definitely not recommended, to say the least. Which time frame do you look mostly for entries? Well, all my trades are framed around the high time frame, so like the daily, weekly charts. I tend to not to go lower than the M15. M15 and the hourly is like the sweet spot for me, but that's what fits my model. There are people who are willing to go lower, but for me, from a tactical perspective, from a psychological perspective, and in general, it does not suit me. It does not suit me to go really low on the time frames. But yeah, this is also immediately why like trading in the current environment is not an option for me. We are so heavily extended overall to one side that I need some sort of a retracement first to anticipate any buys. But in the longer term, I am looking for euro dollar to trade higher, where this daily fair value gap and this buy side liquidity pool would be the overall targets in the longer term. There are big wicks. Oh, big, as in like large wicks, you mean? It's like this. See, and this is also, this is likely to go for the lows. This is not looking that good for upside, especially since dollar is also really weak. So it will not really have the sponsorship to go into the other direction, to be honest. So here as well on dollar, I would mainly be looking at uh, this daily fair value gap over here and this sell side liquidity pool. If you look at the smaller time frame, yeah, that could be the case. But this is not like really weird price action. It's pretty normal, but we are simply consolidating on USD CAD, so not something that's really interesting. Investor, good morning. Well, good morning. For me, it's good afternoon. We are past the morning already. Thanks for helping out. No problem, Hugo. That's why we are here. That's why we are doing these streams, to help you guys out. Normally, I would also be looking for potential trades, but were there any setups you looked for today? No, Pim, to be honest. No. I do not really have interest in. I've said it earlier in the stream as well. Maybe you jumped in a little later. That's okay. But we are too overextended to one side. So framing something on this. Look, if you would see it, let's discuss it like this. This is the entire range. We are too far up a premium to actually frame like trade scenarios on. So we are too deep in premium to continue longing. So we need to see some sort of a retracement first before I can anticipate any sorts of continuation plays. For now, it is just simply impossible. Also, since we are reaching this premium area right over here in the form of the daily order block, a retracement is more likely compared to longing up here. Longing up here is, for me, is a no-go. Oh yeah, it is true that gold looks pretty interesting. I have my alerts set at this short-term low. Let me explain it a little bit. Of course, many traders would probably know that gold is extremely bullish. We've taken out a short-term low after this retracement. After the retracement and taking out the short-term low inside of the daily fair value gap, we saw a significant push higher. So when we zoom in on the hourly time frame, we can clearly see that we are in the market maker buy model, where this is the engineered liquidity, which here is the sell side of the curve. We have loads of failure swings going down lower. Eventually, this is where the smart money reversal took place, with taking out that short-term low, which we've just shown you guys on the daily chart. After that low has been taken out, we could see that we were displacing higher, breaking structure. And now this is the low risk buy area. This is the first distribution, and this is the second accumulation. So personally, I would be looking for a run on a short-term low to potentially position myself higher towards the buy side liquidity. Yes, I'm looking at this. Since the current environment is pretty overextended in general, I would only take this on like a challenge account. I'm not going to take this on my live, but I'm looking to take this on a challenge. where you want to be a buyer underneath a short-term low. Why this short-term low? Well, we have this range over here where we have clear order blocks that should not be violated after displacing away. So when we get the dip, we want to see a nice reaction out of this short-term low to see a bullish move higher afterwards. So yeah, that could still definitely be an option and would be very fair. Where could you place your trades then is probably the question. Here's the short-term low. Let's make it black. Or preferably you want to be a buyer below the short-term low. This gap looks the most appealing to me. So you could place like a limited order in the gap, place your stop underneath the order block and target new all-time highs. You could also be a little bit more aggressive and place it on like the OTE area, but that's up to you. So the main thing that you want to be looking at is this. It's a run lower into the key level. Is a run lower like this, and then you want to see like an immediate feedback in the marketplace for higher prices. It could be the case, because as you guys can see, it could be the case that we are already accumulating inside of this hourly gap. It could be that we are just going to displace higher and then I would miss the setup. That's okay. I simply always stick to trading my model, and if it doesn't fit my model, then I would skip it. So that's why I also just set alerts at like the key levels that I'm interested in. And in general, I tend to do some other stuff, because looking at charts is not going to help you out a lot. So make sure to define the key levels, follow your model. And so if it goes to trade away from here and we do not see the dip, then I'm going to miss the move, but that's okay. Personally, just looking for the move lower to get the move higher. And I do think that in general answers your question. Great. It is my pleasure. But yeah, gold is actually the only chart that looks quite okay to me. Other majors are just simply not that appealing at the moment. What are your thoughts on silver right now? I'm not sure, but we can take a look, of course. XAR USD. Let's do some analysis. Digged into the order block. Look at this. We took out the short-term low right over here. It could be the case that is SMT. I think. Let me check. This is the 3rd of February. No SMT over there. But it could be the 11th. No. So we do not have SMT at the lows, but we are bouncing pretty strongly out of this daily fair value gap. As you can clearly see, stop run on the short-term low after this retracement into a key level in the form of the daily gap. Daily gap has been reached, creating a swing point, displacing higher, we closing above these downwards closing candles. So these downwards closing candles should now act as support in price to push price higher. We digged into it and are likely displacing away from it. What is the range that we are trading within? We took out a short-term low over here. Displaced higher. Took out a short-term low over here. I would not like to see these lows getting violated, especially since we are already trading into the daily order block, which is this line over here. Let's mark it out. This is the daily OB. So I would not like to see this low getting violated. This gap should likely be the place to enter. Then I would, I do have to say that I like the gold chart better. But this is also valid. Look, it is simply bullish, that we can determine, right? So this gap is likely going to be the one that should attract your interest, because look, this low shouldn't be violated, right? Because we are displacing away after we're taking a short-term low here out. We are displacing away from a daily order block strongly, so we are creating this dealing range where you would like to be like a buyer in this kind of the range. So we have this gap, this order block, and the OTE region. A stop loss should be placed underneath the low here. But I'm not really. I do think that I prefer the gold chart more, since we can be a buyer below an old low, which is something that I do really like. And also silver as well, but it has been over the years that it has shown less like strength and interest in general for price to go higher, since we were in a consolidation for a really long time, compared especially to gold, which has shown a lot of strength. So with gold being such a bullish asset, like in general, swiping lows and then go higher is just a very natural thing for gold to do, just because it is also just a bullish asset in general. It has like the thesis and the tendency to go up over a longer period of time. What about USDJPY? We can take a look at USDJPY. USDJPY. Look, overall structure is bearish, that we can determine, but getting into positions right now is not something that I'm interested in. Why? Low-hanging fruit objectives has already been taken out from this internal range liquidity pool, moved towards the external range liquidity pool. So we retraced down lower, displaced away from it, saw yesterday the continuation, taking out the objective on the daily time frame in the short term. So Overall, I would say that follow the trend on dollar. Dollar is clearly bearish, so I would say follow that trend. But also, you should ask yourself the question, is this pair the best to short? In regards to relative strength, that is something that you should consider yourself, Marco. I would say no. Why? Well, it could be clearly seen, right? You can see that the Japanese yen is showing strength against like other assets. Why is that? Dollar index in general is going down really heavily, right? Retracement higher, stop run into daily gap, and we are seeing heavy displacement lower. I do think that you can agree with me with that. However, looking at that displacement compared to USDJPY, it isn't there. We saw a stop run on the daily, and we saw an immediately like a retracement back higher. So we are trading back inside of the range. So this USDJPY is then showing strength compared to dollar. Dollar is really weak. This is showing strength. So this is not your best short. So I would not suggest that you are going to look at USDJPY for potential shorts compared to maybe other assets. This is all due to the relative strength not being there. And if you have any more questions about it, you can of course always ask them again. Yeah, the news just came in. That is true, but yeah, zoom in a little bit on the lower time frame. But I've said it at the beginning of the stream as well. I'm not really expecting like a lot of moves on majors. Today, also not with the news because we had already seen such massive displacement already. You should know, following market cycles, that after heavy expansion to one side, which we have, we either gonna see consolidation or a little retracement. We are not going to see expansion followed up by expansion. See here, you can, for example, see it. We have expansion, retracement, expansion, retracement, expansion. Yeah, this could be the retracement, but this is not significant enough to anticipate trades on, at least for me. Are we seeing some dip on gold? Also not really, it's just consolidating. Just simple consolidation. Do you guys have any pairs that you are like think, oh, this looks interesting? Because look, I mainly trade like these pairs. So, and I tend to stick to that only if we are having a very extended consolidation on DXY. I tend to look at exotics, but most of my trades are framed around the majors, and I do think that is also the wise thing to do. But hey, that's something that works for me. It doesn't have to be the case for you, of course. Where do you suspect DXY to hold? Um, well, to be honest, it could be the case that we will be seeing a little reaction out of this daily order block, so that we can have a little retracement, but price is so significantly heavy we could just fall down. Um, if we were to really see like some sort of support, I would have liked to see somewhat of a reaction today, but we are not seeing that. So it could be just the case that we are just going to see another drop tomorrow, but we have to see that. Most of the time, the Wednesday and the Thursday New York sessions, Thursday the entire day actually, is bad for majors due to the fact that NFP is coming up on the Friday. So price tends to remain in a consolidation, especially on Thursday. So the main watcher for the week is going to be NFP release. So seeing this and we are not having a real reaction, I would say that this daily gap could give a bounce so that we can trade towards the sell side liquidity pool afterwards. But overall, this to me just looks like a clear market maker sell model on the daily time frame, where this is the original consolidation. We are now seeing the clear reversal, so we should just look for shorts, in my opinion. I'm not looking for higher prices on dollar index. 10-year has the bonds have SMT on the top and a significant rejection. Do you think this means that we will go lower on bonds and this got relief on DXY? Well, let's take a look at the bonds chart. Probably have SMT over there. Look, you know what it is. Of course, it could be the case. Oh. But let's zoom in. I would not consider that yet. Look, an SMT is only valid if it is followed up with like a break of structure, and it is too early to tell. So for now, it could just be the case that the 30-year is lagging behind the 10-year and the 5-year, which it normally is because it just makes sense. And that it's just going to be playing catch up, and that we will just liquidate the high eventually as well. I think that is more likely to happen. Could it be the case that we are going to see a little relief? Yes. Does that mean that I'm going to change my overall thesis on dollar? No. I will remain bearish until proven otherwise. Also, guys, if you enjoy the stream, make sure to also smash the like button, subscribe to the channel, which of course will help out everyone. Yeah, London session was also brutal. Literally Asia stop run, London continuation, New York doing fuck all. You can ask me anything, Pim. always. So yeah, I'm not sure, of course, if I have the correct answer for you, but we can always try. This is also going to be the final question I think that I'm going to discuss. Little 40-minute stream already, and then I think that we can close it off. But I will take my time for you, of course. Send the trader. Good afternoon, man. Hola. ¿Tú hablas español? ¿Cómo está? For people that hopped on later into the stream, looking for a retracement on gold, a run on the short-term low, to be a buyer towards new all-time highs. This is actually also the only thing that I'm interested in right now. Other markets just look ass. Hugo, no problem, my friend. I hope to see you again in the other streams as well, man. Have a nice day. Investor, bye bye. Yeah, Sand the Trader, you're hopping in a little late. We are closing off the stream. I'm going to discuss one psychology question from Pim, and then I'm closing it off. When I trade for a long period, build up some profits, but later lose most trades because I get overwhelmed. How do you handle these situations? I also enter trades that are not really followed plan. Uh, yeah, it is. Yeah, it is pretty clear. So you are. I'm just going to repeat it, and if I need to have like any adjustments in my scenario, then you can just add it to the chat. But look, what it mainly is that it looks like you are lacking like a real plan that you stick to. What can help with that? First of all, creating a plan. Creating a plan is the first thing that you should absolutely do. Creating the plan would be like the backbone of your trades. The second thing is you are likely going to have attachments of other feelings towards trading itself. You want to earn quick money because let's be honest, we are all in here for the money aspect of trading. But it is important to see it like as a real business and something that is gonna take time. That's also a really important thing. However, with that and creating a plan, it is very important to, together with that plan, combined with that, you should be able to have the data to back your plan. What do I mean with that? Well, let's be honest. If you have like a data that is backtested, that has like a lot of data, you will become a lot more, you can more easily stick just to that plan because you know what the probabilities are of the outcome over the next, like, let's say 1,000 trades. If you do not have that data, you are just going to do something out of nowhere because you are having a goal and you want to reach that goal. However, just doing random things is not going to get you towards that goal itself. So I would mainly say that, first of all, you are saying it already. I'm taking trades outside of my plan. Create a plan that consists of a model with a checklist. And that checklist could simply be a list with things you check off. And if you have enough checkpoints, you are able to go into the trade. And if that's not the case, you are just simply going to do something else. You are going to close off the charts or going to do some other works that could refine like your system, etc. Because that's really important. And to have like the confidence to do that, so to walk away on moments that you are not really able to see a trade, or what else, that is where the correct data comes in. Because if you have the data, you will have the confidence to skip out on a day or to have like more patience in your overall trading. um, that will bring you a lot further in general. So I would say create a plan, create a checklist, uh, gather data around the plan, and that will bring you a lot further in your overall trading career. And I hope that this explanation was a little bit clear. And if not, uh, make sure to leave that in the chat so that I can elaborate a little bit more on it. Okay, that's great, man. That's great to hear. And if you have any questions, you can always reach out to me so that I can maybe help you out a little bit. It could be the game. Look, greed is a very bad habit to have it. That's also why I always suggest people that, especially that are starting out, get a job. Get a job besides trading. Multiple streams of income does mean that you can take it a lot more easy, and it will create a lot more rest, and you will not be able to, or you are not less willing to force trades in general. Look, from a personal perspective, when I first got into like the funding game with prop firms, etc., I very much came in a situation that I really wanted to go quickly. I wanted to scale up really fast, and that got me into a bad spiral. Uh, and it is not, it came from something good because I wanted it really bad. I wanted to make progress, but just because I wanted it so much, that hurt me. So your greed is not necessarily bad, but in trading it could cause a lot of harm. So maybe try to think about that as well. Oh, and besides that, the tips that I've shared with you, of course, but that's also, but I want to be a little bit more specific about it. I said gather data. Make sure to also journal all your trades, winning, losing, make weekly reviews. How did the week go? Do I need to do something different? Like such things, because reviewing your charts and reviewing your data is going to help a lot, and that's also going to make you progress a lot quicker. um, and also, if you are having like struggles with greed and other mental psychological things, having like a journal, like a little notebook, where you can, in some sort of way, maybe a diary or something, if you have something like that, you can write out your emotions, and then maybe for the next time you can maybe control them a little better. Because in the end, we are people. We cannot get rid of our emotions, but eventually over time we can try and control them in a better way, and that comes with more experience. And that is how I'm going to round off the stream. Um, if you enjoyed it, make sure to press the like button. If you have any sorts of questions, you can always hit me up in the DM or something else, and I will try to help you out. For now, I would like to wish you guys a very nice rest of your day, and I will speak to you guys next week on the channel again for CFT Academy. Okay, bye, guys. Bye bye.